السادة الحضور، أهلا وسهلا فيكم باليوم الأول من المؤتمر الدولي السابع للتأمين AqabaConf 2019 الذي يقام بدورته السابعة تحت رعاية معالي رئيس هيئة مفوضي سلطة منطقة العقبة الاقتصادية الخاصة المهندس نايف باشا أحمد بخيت، وبالتعاون ما بين الاتحاد الأردني لشركات التأمين والاتحاد العام العربي للتأمين. المؤتمر بدورته السابعة لن يقتصر فقط على المواضيع المتعلقة بفرع التأمين البحري والنقل، بل ستتناول محاوره مختلف القضايا المتعلقة بجميع فروع التأمين، ومن ضمنها مخاطر التحول الرقمي لشركات التأمين، التأمين التقليدي مقابل التأمين التكافلي، التعرض للكوارث الطبيعية، تأمين المخاطر مقابل رأس المال، وذلك لتوسيع شريحة المشاركين في المؤتمر واستقطاب قيادات وكوادر تأمينية جديدة من مختلف الدوائر والإدارات المعنية بالتأمين ممن لم يسبق لهم المشاركة في الدورات السابقة. والآن اسمحوا لي بالتكلم باللغة الإنجليزية. سيتم توفير خدمة الترجمة الفورية للي حابب أنه يسمع بالعربي أو بالإنجليزي حسب اللغة اللي حيتم استخدامها في السيشنز. بتقدروا تاخدوا أجهزة الترجمة حالياً. Ladies and gentlemen, allow me now to speak in English. We will provide you with a translation from English into Arabic and vice versa. For those who did not get their headsets, you are kindly requested to pick your headset from the table at the entrance of the hall. Welcome to our first day of the 7th International Conference AqabaConf 2019, organized under the patronage of the Chief Commissioner of Aqaba Special Economic Zone Authority, His Excellency Engineer Naif Al-Bakhit, and in cooperation between Jordan Insurance Federation and General Arab Insurance Federation. Our warm welcome goes also to our international participants who visit Jordan for the first time. We hope that you will enjoy your stay and feel at home in Jordan. Before we start with our session, I would like to drag your attention that we will be sending push notifications to the conference application to remind you with the important issues related to the conference, such as sessions, dinners, and transportation. Therefore, we highly encourage those who did not download the application to download it to their mobiles. For assist, please visit the application provider booth in the coffee break area, and their staff will kindly help you with the installation. We are pleased to inform you that the 7th biannual Aqaba Conference, AqabaConf 2019, expanded its scope this year and last year further than marine topics and cover topics related to various insurance issues. Our first session for today will shed the light on digital integration between risk and insurance. The first topic in this session will talk about cyber risks and insurance. Please allow me to give the floor to the head of session, Mr. Wael Khatib, Senior Partner and Chairman in Lockton, MENA. Mr. Khatib will introduce us, or will introduce our first speaker to you and give us a brief of his presentation. Please welcome Mr. Wael Khatib.
Thank you. Thank you for your kind introduction. Good morning. Assalamu alaikum. Good morning, everyone. And thank you for giving us the opportunity to present today and for me to head the session relating to cyber threat and insurance. I won't stay long because we were late, so we'll go ahead as soon as possible. I just wanted to speak a little bit about the new emerging risks in the last decade. I think the landscape of risk, as we all know, have changed a lot in the past 2 decades. Things we know and things we don't know. 2 things have been keeping the industry really busy is mainly climate change and technology in general. And climate change, the natural phenomena have changed. We are addressing it as an insurance industry as much as we can, but I think the frequency and the severity of the disasters we have seen in the last decade have changed from what we have witnessed in the previous decades. The new risk, or the landscape of the risk, have changed also from the technology perspective. The more we are advanced, the more the cyber threats come, and engaged governments, engaged institutions, organizations at personal level, at corporate level, at government level. The losses we have seen is actually in the media all the time now, and we were late in our part of the world receiving the feedback. Until now, we are aware that not everything is reported in our media, what happened in our part of the world. But at personal level, we have had hacking. At corporate level, we had issues. At government levels, we had issues too. And I'm hoping Zainab will address all these issues. So let me introduce to you the speaker relating to this subject. Zainab Khatib is a graduate of University College of London in linguistics. She has a master's degree with distinction in insurance and risk management, and she currently underwrites cyber insurance only. So Zainab, you can start. So we will take questions at the end, and we'll engage more into this business, which engaged all facets of our industry, from legal to cyber crime companies to everything you can imagine. Thank you. Thank you. Zainab, welcome.
Thank you so much, Wael, and thank you so much to the Jordan Insurance Federation and all the sponsors for allowing me to present here today. An amazing opportunity. I'm so excited to be here with you all today. I think this conference is a fantastic platform and the right time for the Middle East, insurance companies and businesses alike, to really hone in on a topic that's taking center stage in media, boardrooms, and the topic of cyber is something that's becoming to be known as a real disruptive force for some, but I believe that's exactly what makes it a key opportunity for the insurance industry. Cyber risk is a continuously evolving threat. For insurers of cyber assets and liabilities, it represents a challenging risk to assess, and it only has a short catalogue of historical loss experience, and the patterns of loss are rapidly changing. This is a class of business where one incident can transcend geographies, multiple industries, and multiple insureds. It's catastrophic in nature. I'm happy to take questions at the end. As well as said, I'm just conscious of the 45 minutes we have, so without further ado, I think this is. Got it. In the first half of this session, I'm going to set the scene as best I can when we talk about the cyber landscape. This is everything from what the key concepts are to who the adversaries are, what attack vectors they're utilizing, and what kinds of breaches we're seeing. I also want to touch on some past trends we've seen in 2018, and I really want to give a flavor of what's going on here in the Middle East from a threat perspective, and then look further into 2019 and speculate what that may hold. I can tell you it's already been a very interesting year. In the second half of the session, I'm going to discuss the insurance market that's arisen out of these risks associated with cyber. I'll talk around why cyber has its place in the market, the current size of the global insurance market, and where increasing opportunity lies. I want to raise and debunk a few common misconceptions about cyber, and this usually comes from within the insurance industry itself, and then really get down to the nitty and gritty of what is actually being insured. I'll touch on some of the challenges going forward for cyber insurance, kind of a food for thought, and then what the insurance outlook may be for 2019. I want to emphasize, unfortunately, the biggest weakness in the global cyber insurance market is the lack of education and understanding of the threats and their accompanying coverage. I want to make sure that by the time you all leave this room, not only do you understand some of the key concepts related to this line of business, albeit not an encyclopedic explanation today, but you also understand the current cyber landscape and how insurance is responding to this. So some of the key concepts. I think it's important, first, we ask, why has cyber become this great buzzword? Well, we're in the midst of a new phase of the Industrial Revolution. It's significantly changing the way the way production occurs through the digitization of manufacturing. Industry 4.0, as it's been coined, focuses heavily on joining advanced digital technology production techniques with the Internet of Things to achieve greater efficiency in production. This involves companies globally relying heavily on the interconnectivity of their systems, automation, and real-time data. The significance and power of Industry 4.0 comes from the network of these machines communicating with one another in an aim to remove the human element and ramp up production. This is all in an effort to drive efficiency, and it's increasing just-in-time models, but now you need your networks to perform perfectly. This is dependency around technology and data we have never seen before. So surely data then becomes the new oil. Data has never been so valuable. The total amount of business and confidentiality data that's being stored is doubling every 12 to 18 months. Companies are digitizing all of this information from their customers, and they're analyzing it for insights in ever-increasing volumes. And we're really starting to see huge amounts of value being assigned to this data. The analytics company, Poneman Institute, in 2018, found that in terms of cost, data breaches are costliest in the United States, as we'd expect, but also in the Middle East. The average cost of a data breach in the MENA region is $5.3 million. It also found that entities in the US, as we'd expect, but also the Middle East, spend the most on post-data breach costs. So these are setting up call centers for customers who've suffered a data breach, the legal costs involved, identity protection services, and these were on average $1.4 million. These are all insurable costs, but a lot of reports have shown that a large percentage of organizations don't know that cyber insurance covers data confidentiality breaches. This increasing dependency on digital technology can also be seen in the somewhat slow death of hard currency, the rise of crypto, online trading and banking, and online service platforms. We're also seeing it arise in the Internet of Things, appearing in medical devices, vehicles, and residential control systems such as your AC or heating. This emergence of connected technology is really widening the attack surface for hackers, and it's creating new exposures now, such as physical damage or bodily injury. So when we discuss cyber risks associated with systems that companies rely on, it's important to realize that enterprise technology and operational technology present totally different risks. Enterprise technology is really just the computer software that's used for business needs of an organization, so they're IT systems. Operational technology is both the software and hardware that's used to support and monitor physical processes. So these are your systems like industrial control systems, SCADA systems, and safety systems that are the backbone of manufacturing, utility, and energy firms. And we also see them in ship navigation systems, for example. But because these were not originally designed to be connected to the internet, they've struggled to become cyber secure. Their interconnectedness with enterprise technology and then along with the internet brings really hugely unwanted risks. So it's important to realize that protecting data on enterprise technology is totally different to protecting operational systems that can have direct safety implications, and they have to be viewed separately when analyzing cyber risk exposure. And finally, availability, integrity, and confidentiality. These three elements are considered the three most important components of security, and these are the features of precious data that we're trying to safeguard. In this context, confidentiality is the set of rules that limit access to information. Integrity is the assurance that that information is reliable and trustworthy, and the availability is the guarantee of reliable access to information by authorized personnel. All security defenses that companies are investing in are employing methods to keep these elements intact, but the methods they use are outside of the scope of today's presentation. So from a threat intelligence standpoint, insights about a client or industry's exposure can be gained by understanding who the adversaries are, who's stealing data, who are taking down systems, so the threat actors and their intentions. They're ever evolving and they hold many different motives, but they can be grouped into a few buckets. So you've got your threat actors with political motives, so your cyber espionage groups. I'm talking your nation-state, state-sponsored terrorist actors. They're highly sophisticated due to the knowledge backing them. They carry out stealthy attacks, gaining unauthorized access to networks. They remain there for an extended period of time, being undetected, and they are persistent until they reach their objective. They move quietly, and they have all the latest technology to infiltrate, but also cover their tracks, because unlike criminals, they are sensitive about their reputations and the impact an accusation could have on foreign policy interests. So cyber is increasingly political now. There's been more nation-state activity than ever in this cyber landscape, and we're seeing certain nations wanting to show their cyber capabilities and their strengths, and we see others having a go as they're interested in grabbing intellectual property from organizations. The next group are criminal actors. This group, the majority of the time, are financially motivated. They're after the value of data and the value that could be assigned to your dependency on your technology. The value of data changes, it's fluid, and we see that these groups are adapting to this. So at this point in time, they're tackling data as a currency. They're using cryptocurrencies to support their activities, and ultimately they're just interested in monetizing the information they steal to fund their activities, such as fraud. And we do see criminality being the main part of cyber losses. Then you've got your hacktivists. They're motivated by individual ideologies, whether that's political, religious, environmental, with goals that may not be particularly well funded or orchestrated, but they're usually quite effective. Script kiddies are the unskilled individual who use script or programs developed by others to attack computer systems and networks. Despite being more immature, they're unfortunately just as dangerous an exploiter of security lapses on the internet. And finally, you've got human error. This is so overlooked by many organizations in general, but it's a huge reason data breaches occur, and they're accidental in nature most of the time. Human error can expose organizational data systems to hackers or unintended information to intruders, and it's one where your typical cybersecurity measures, such as an antivirus, cannot prevent. So I think the one commanding aspect we've mentioned about the dependency on networks is the amount of attack vectors or types of breaches that can occur from this increased use. We tend to classify data breaches or attacks by the following broader headings. So hacking or malware. Historically, the main cause of data breaches is from malicious outsiders. This can simply be hackers gaining unauthorized access to systems. It can be done in many ways, and being able to access or extract confidential information or release malware into the network that targets your systems, and this is usually due to vulnerability in companies' security postures. Ransomware attacks, for example, they also come under the heading of extortion, are now much more sophisticated than we'd ever seen. And this is where malware infiltrates your network of a company, disables servers, or locks up data until a ransom is paid. Attempts to extort major companies using cyber attacks have grown in frequency, scope, and ambition. One report showed increases in ransomware attacks in every single country in the Middle East. And to give you a perspective, there was a 12% increase in ransomware attacks in the UAE from 2017 to 18, but a 625% increase in Kuwait. We also see social engineering and phishing, and this involves the use of deception to manipulate individuals into revealing confidential personal information, so this is such as passwords or credit card numbers, that may be used for fraudulent purposes, and they use requests such as emails, for example, pretending to be a business colleague. This still remains the easiest, cheapest, and most effective vector of entry into organizations. We've also seen reports that Morocco, Bahrain, and Kuwait have experienced some of the largest increases in the Middle East in phishing attacks from 2017 to 18, with over 100% increases. Another I'd like to just quickly pick out are vendor hacks, or your supply chain attack. And this is when a hacker infiltrates your system through a vendor or a third-party provider who has access to your systems and data. More and more suppliers are accessing information and they're touching your network than ever before. So this has really widened the attack surface for companies. And this is usually the low-hanging fruit. Consider the fact that 23% of companies in the MENA region manage more than 21 vendors. And yet the Ponemon Institute reported that 56% of organizations who've suffered a breach say it was caused by one of their vendors. That's a lot of due diligence to be done in their cyber risk posture, and it's a step that's probably being sidestepped. Unintended disclosures really become an issue in companies that are utilizing more cloud-based software, software as a service in general, and they're carrying out more of their day-to-day business online. If employees don't receive the right training or there's misconfigured software, this can easily lead to unwanted confidential information being accidentally disclosed. Companies can inadvertently share this info with vendors who they shouldn't with, and equally a vendor who has authorized access to this information may accidentally expose the confidential data. Unintended disclosure remains a significant loss process. We also see insiders or disgruntled employees behind data breaches, a way of getting back at a company they're unhappy with, and the loss or stealing of portable devices and physical devices. So we've got a feel for what the cyber world of activity entails, but what did last year's cyber landscape look like? On the surface, not much has changed over the last 10 years, but when we start to go more granular, we can start to see some real key trends. So we're starting to see greater public attribution of attack activities by governments. And until now, it's been private cybersecurity firms that are publicly assigning blame for cyber attacks, not the governments. So in fact, the fact that this is happening and governments are starting to combat these threats by public accusations is positive, because their reports, their attribution reports, tend to be detailed. They're laced with hard-hitting facts about the nation states who are carrying out these attacks, foreign intelligence units, and they're giving the wider community a better feel for this risk landscape. This is definitely a step in the right direction. It's a powerful tool for deterring attacks, but it's obviously dangerous as one government accusing another government does increase the risk of geopolitical tensions. One of the other key defining moments for tech was in May 2018, when the EU implemented General Data Protection Regulation, the ominous GDPR. The legislation is the toughest privacy and security law in the world. It's meant to guarantee users better control over their data, and there's heavy fines for companies that violate this, up to 20 million euros or 4% of a company's annual turnover. So it's increasing the cost of a data breach to organizations. At the start of 2019, we saw France's information regulator fine Google 50 million euros for failing to comply with the GDPR. That's the highest fine yet to date, and it's showing that tech Goliaths are not safe. Its reach also plays a big part. The legislation applies to any company that handles personal data of EU citizens, and this is why GDPR is such a big deal, because that could include any of your clients. As more and more customers move to software as a service and cloud, attackers are following this data. So we've seen attacks against cloud providers, telecoms, and other organizations with access to large amounts of data increasing. The next trend has really just exploded, the commoditization of cybercriminal tools. We see the online purchasing of ransomware as a service, malware as a service, and they can be purchased as easily as clothing can. They even have refund services available for this. It's a massive marketplace, and services like this just increase the ease of carrying out an attack. One dark web forum in particular has introduced a monthly subscription service to cyber hacking weapons, which they're claiming can penetrate various computers and networks in ways that are not known to the public yet. And the other key trend we've seen is the utilization of cryptocurrencies. Cryptocurrency has helped hackers profit from their cybercrime. Cyber extortion payments often use popular cryptocurrencies like Bitcoin, and those that are less traceable are becoming more popular for use in the cyber black market. Another issue that we've seen that's been aggregating these hackers are that companies supposedly are stockpiling Bitcoin in case of suffering a ransomware attack, and the hackers are aware of this. I've included this in the slide deck just for some stats of Liberty's own internal analysis, just to indicate some of the cyber trends we've captured over the years. But I'd just like to press on so that we can look at the specific trends within the Middle East. So when we talk about cyber as a global threat, there are subtleties from region to region, and there's quite a lot to talk about when it comes to the Middle East. There's a key cyber espionage threat to this region. APT-39 is an Iranian cyber espionage group that threat intelligence experts and most likely governments have been tracking since November 2014. APT stands for Advanced Persistent Threat Grade Level Actor, so your nation state. And while APT's targeting scope is global, they're heavily focused on the Middle East and the Gulf region. Forensic evidence has shown that they're targeting the telecommunications, high-tech industry, and government entities. These are attractive targets because of the large amounts of personal confidential information they store, and they provide access to critical infrastructure and other key targets. The choices of industry sectors suggest intent to perform monitoring and surveillance operations, collect data for purposes that serve strategic requirements related to national interest, or create additional accesses and vectors to facilitate future campaigns. We've also seen the Triton malware. So a hugely interesting cyber attack was illustrated in the Triton malware event, which was discovered in a petrochemical plant in Saudi Arabia in 2017. And it was shocking for the way it alarmingly targeted safety instrument systems. And it attempted to take remote control of them, but actually a flaw in the code gave the hackers away. But had they managed to totally disable that system, then used other malware to create a system malfunction, you can only imagine the consequences. We saw another similar attack on an Italian oil services firm in December 2018, which destroyed more than 300 of the company's computers, disrupted production, and affected its operations in the Middle East too. But it also directly targeted their safety instrument systems. This was linked to a variant of the Shamoon virus, which was used in one of the most damaging cyber attacks we've seen so far, which was on Saudi Aramco in 2012. This virus is also supposedly linked to Iran. And these are the first kind of malware to specifically target a safety-critical system. And the fact that this region is frequented by energy and utility-like sector, coupled with hackers' increased focus on critical infrastructure, makes this a threat that Middle Eastern businesses and the insurance market need to take note of. We've also seen some general trends in financial crime, hidden phishing risks in M&A. In 2018, FireEye, who are a threat intelligence company, conducted investigations in the Middle East and found that M&A activity was allowing hackers that had compromised the system of an acquired company to also compromise the system of the acquiring company. It's certainly a risk we look into when we're underwriting organizations undergoing M&A activity. With pressure to meet deadlines, we see cybersecurity objectives being forgotten, the immature integration of networks without due diligence, and lax email correspondence. And all of these elements reduce the company's cybersecurity posture and allows them to be leveraged for an attack. And finally, there is a growing underground cybercrime marketplace in the Middle East, but we saw a shift in 2018 as it appears it's getting more sophisticated. We've seen improved malware coming out of this underground and a shift in the targets being from government entities to the oil and gas sector. The concerning issue here is that they are already carrying out somewhat proof of concept attacks on these entities, and they're likely to target them at a later stage through the learning process they've made. The type of attack at the moment tends to be cyber extortion. They're looking at taking down manufacturing processes or certain systems that help run the business, and to extort that organization into paying them money to get those systems back online. And we're also seeing IP theft of data to sell to different oil and gas industries from all over the world. So what's going to happen in 2019? Well, AI and machine learning have been buzzwords for a few years as more cybersecurity vendors are incorporating them into their solution. The trouble is the hackers are doing the exact same thing. In the same way that security vendors are training their security models to detect malware samples, malware creators can adjust their malware to avoid detection using the exact same algorithms. We're currently fighting fire with fire. There have already been proof of concept attacks to illustrate an attack powered by AI, and they use indicators such as face, voice recognition, geolocation. So I suspect we're going to see the first instances of these taking place. A key aim of hackers is to keep pace with the improvements that are happening in the cybersecurity world. So the second statement, we're going to see a previously unknown threat vector in the systems or cloud environments, is not really an eyebrow-raising prediction as much as it is something that everyone needs to come to terms with. This will most likely be the case every single year in the cyber world. We expect to see the equivalent of Meltdown and Spectre of 2019, and this was where in 2018, security professionals found that nearly every central processing unit manufactured in the last 2 decades, so these are the units responsible for most of the processing inside of a computer, contained fundamental security flaws. Cloud services were impacted, devices running iOS, macOS, and Windows were too, and no one could have seen this coming. I think it's important for people to have an awareness that this is a real possibility and characteristic of the cyber world. Finally, an industrial control system hack. Actually, just after I sent off this presentation, we saw a cyber attack take place on the industrial control system of Norsk Hydro, one of the world's largest aluminium producers. And they had a cyber attack that affected the company's IT systems, disrupted most of their activities, and they caused production to temporarily shut down, and they affected operations in the Middle East too. This is something that is really relevant to this part of the world, and considering we've already seen hacks with the Troughton malware and Shamoon virus, I doubt this will be the last. But what we should start proactively thinking about for loss events in 2019 is how the malicious actors are becoming more sophisticated in their approach, with some of the more dangerous threats to businesses and societies not being a full overload or shutdown of the energy grid, as everyone likes to say, but something altogether subtler, such as the idea of too little or too much power, or something in any other utility company. The ones that are potentially difficult to detect because they're inconspicuous, they don't trigger the safety systems or an obvious shutdown, and they will be disruptive. And it's something risk managers and insurance professionals in this region need to start taking note of. Considering this busy risk landscape, 2019 is definitely a year where insurance should become a part of that discussion in boardrooms. No truly innovative security technology company has received widespread adoption yet in the past 5 years, and it shows that cybersecurity is not yet robust enough to be the sole solution for companies to rely on. So, what's going on in cyber insurance? To understand the current state of cyber coverage and how insurance is responding to all these threats we've discussed, it's helpful to have an understanding of the development and some of the major milestones that have helped shape this coverage today. So the first cyber policy ever written was in 1997 in the US. It was an AIG product, and it came to assist in the dot-com boom, and it was a third-party liability product. It eventually referred to not only soft data, but hard data, And whilst this is a small change, it was a large expansion in coverage. So policies began seeming like true security and privacy policies. We actually saw data restoration costs and non-damage business interruption being covered very early on. This brought in the first-party element. And then we saw extortion coverage becoming another common inclusion in policies after a number of extortion events in 2004. The next stage of development was in the privacy world, and this was the enactment of a variety of state-based regulations in the US around 2003 and 2004. Regulation has been a real key driver in cyber insurance's growth, and that's where we see the widening of third-party coverage to address these additional responsibilities that organizations are facing. Just recently as well, the crippling WannaCry and NotPetya malware attacks of 2016 and 17 that affected companies globally confirmed the potential size of first-party losses too, and this brought home to companies the potential cost of a cyber attack, and that's really increased purchasing of this kind of cyber insurance. And to be honest, whether cyber insurance is new really regards what insurance companies refer to as cyber. Within Liberty, we define cyber risk to include the range of first and third-party exposures that arise from the use of information technology and the liability arising out of the loss of data. In our view, that risk exists in all policies, not just cyber, unless you manage to deal with this. And this is something the market needs to be aware of, the issue of affirmative versus non-affirmative cyber risk. Affirmative cyber risk, it's simple. It's where the peril is defined and coverages are explicitly offered in the policy. But non-affirmative cyber risk is where the cyber peril is not explicitly excluded, but not explicitly included either. It's interesting to look at how this is being dealt with in the market. Many insurance carriers have not actually defined their tolerance for all cases of cyber. And it's our view that affirmative cover is the best solution for cyber risk. It's specific to the cyber protection needs of an organization, and it genuinely intends to cover the threats that we've discussed. So why is cyber insurance important? This is interesting. I hope by now I've demonstrated that the threats are real and significant to businesses. But another pretty self-explanatory fact are the fact that many businesses lack adequate protection to prevent an attack. They lack preparation to respond effectively, but others have really good cybersecurity postures. So everyone's at a varying stage of cyber risk mitigation maturity. But cyber insurance is much more than just a policy. Typical insurance programs include loss mitigation, crisis response, and guidance services. And this is hugely beneficial to a client who's suffering a breach or a cyber attack, as in the moment it can be very disorientating and confusing, and insurers can help clients make, in those moments, better decisions and mitigate the potential for further reputational damage or financial loss if they were handled incorrectly. Cyber policies are increasingly becoming a part of clients' incident response plans in such situations. So if the value of data and online assets are constantly changing, I'd be asking your clients, how are you as an individual organization managing all of this? Do you know how to model the future when it's unknown? And this is where insurance doesn't just cover unforeseen circumstances, but unknown circumstances. As I said, year on year, 2019 being no different, we're going to see unknown threats that render certain security defense system as useless. And an insurance policy will add that additional layer of protection to businesses that will make all the difference in the immediate effects of the breach, but also the long-term financial effects. Cyber is catastrophic in nature. At this point, I would consider to be the most important in the slide deck. It should come as no surprise that for a class of business where a malicious attack can transcend geography, multiple industries, and multiple insureds, it's inherently a cat risk. So in light of this, businesses need to plan and budget their cybersecurity risk management level to a level that's reflective of their peers in that industry. However, there is an inflection point in the total cost of risk, which is where insurance really adds value. In the past decade, we've seen huge amounts of investments from companies going into their cybersecurity. But after a certain level of this investment, the value gain starts to plateau. You get to a point where you can never have enough resources, or you get to a point where if someone wants to get through, they will, or you simply experience a tech failure or human error that leads to downtime or the exposure of confidential information. Technology of cybersecurity doesn't cover every base, and yes, it goes a long way in securing data and protecting networks, but it can only do so much. The return on every dollar of insurance spent makes the real difference. So let's say you know what the 1 in 100 incident is for your organization, and we want to get our risk level from a 1 in 90 event to the 1 in 100. That small jump for a company could equate to a $5 million spend in IT, and they have to get sign-off for that. Or it could equate to an insurance policy that's $250,000. And finally, C-suite level management are more accountable. It's no secret that a lot of people have actually lost their jobs over large incidents that could have been stopped with a bit more grip on their cybersecurity management. We saw this in the retail losses in 2014, and nowadays that would include the discussion around a cyber insurance policy. And to many people's surprise, it's not the IT guy, and it's not even the CISO these days that are being held accountable. It's the CEO, because these cyber attacks have a much wider scope. It's brand reputation, it's long-term financial loss. So cyber insurance is definitely a talking point in boardrooms, and they need to form part of the risk management process. And it's C-suite level management who need to sign off these decisions. So misunderstandings about insurance coverage for cyber risk begin with a lack of knowledge and awareness about the availability of specific coverage or capacity. As we stand, there's around $725 million of capacity globally for cyber insurance. As companies are starting to get to grips with the values that they want insured, I suspect we're going to be seeing $1 billion towers very, very soon. The average policy limits increased to roughly $6 million in 2017. I haven't actually got an updated figure yet for 2018, but it seems to be quite similar. And the average largest cyber policy limit increased by 66% to $101 million. You can see the overall trend of large percentage increases, where growth is really reflective of increasing awareness of cyber exposure and an understanding and appetite to include insurance in their risk mitigation procedures. We're seeing year-on-year increases in the annual total gross written premium, and the Betterly reports show that the larger insurers are seeing the greatest increases, with lots of premium likely to be coming from new insureds. I'm wary of predicting the value of cyber insurance premiums worldwide in the future. Uptake has been slower than expected, and we see this largely because of a lack of awareness of how cyber can really add value to a company. But Morgan Stanley supposedly forecasts that the market will be worth $8 to $10 billion by 2020. Currently, the MENA cyber insurance market is largely a reinsurance market with fronting capabilities from carriers with already made products. But there are opportunities and capabilities to develop this here. We've discussed GDPR that's likely to pick up in 2019, and we've seen the initial signs of regulators picking up the pace by challenging tech giants like Google, and a key American utility and energy regulator issued fines just in February to a utility company for violating 127 cybersecurity regulations. The shift in regulatory expectations will likely have positive effects for the cyber insurance market. They involve many costs that can be insured. The development of contract law will also see an uplift in insurance. The typical exposure actually arises from the payment card industry. They've implemented data security standards, which are industry rules as opposed to laws, but they can result in fines and penalties from $5,000 to the low millions. The assessments that can be enforced by these on merchants are costly as well, but they are insurable. Most merchants don't understand the full extent of the risk they take when they're accepting credit cards. And the Middle East is an emerging market. It's an area of the world that's already suffered some major cyber attacks and losses due to the perceived high information assets they own and the IT infrastructure they have. But we've seen some regional players, I believe Kuwait, the UAE as well, are already improving their privacy policies off the back of GDPR, giving greater focus to cybersecurity awareness. So the answer is yes. The Middle East will follow suit soon, but it's really legislation and education and the awareness of the threat landscape here that's going to drive this in the long term. So some of the common misconceptions. I wanted to say that in the past, cyber insurance was a polarizing issue, but it's an area that's still shrouded in so many misconceptions. Some professionals are worried that policies currently on the market don't meet their client needs or they're too costly. But I believe the industry really is maturing, and the coverage options today are so much better than they were a few years back. There's plenty of fallacies I could touch upon now, but what's really shocking are the large misconceptions coming from within the insurance industry itself. In November, I read an article published by a well-known insurance publication that discussed how the market should be beginning to provide cover for non-damage business interruption in utility companies. As discussed, this has been standard in wordings for years, and it just baffled me that this is being published, and this is the kind of press that's educating the market. So what is actually being insured? Because cyber risk is so pervasive, people sometimes think it may already be covered in other policies, and for the large part, this may partially be true. But because each policy covers a specific purpose, there will almost certainly be gaps. Cyber insurance policies are split into two coverage groups, first and third party. So in relation to our first party coverage, we cover loss of damage to digital assets. These are the costs by the insured in restoring, updating, recreating, or replacing digital assets to the same condition they were in prior to the loss. Uniquely, we also consider insuring digital assets for a pre-agreed value if their recreation does not re-establish the pre-financial position. Non-physical business interruption and extra expenses covers any interruption or degradation in service or failure of your network. We would pay for the income lost as a result of this, as well as interruption expenses when mitigating and investigating the incident. And these are usually subject to a time or monetary retention. It's from about 8 to 12 hours. We also cover cyber extortion, so these are your ransomware attacks, and cyber terrorism. We actually handle the extortion demand, and we pay the necessary extortion monies rather than allowing the perpetrator to follow through with their threats and cause the client further loss. The majority of cyber policies also utilize broad war and terrorism exclusions that have been brought from property policies, but we do have a right back for terrorism activities when conducted electronically, or they're aimed at destroying or destructing IT systems that are related to communication. We also offer, if requested, reputational harm that results in a loss of income through, for example, the loss of customers due to a data protection breach being reported. And we would cover any increase of working or PR costs that are expensed as well. Cover for first-party policies on the loss depends on them being caused by an insured cause of loss. So these can include not only computer crime and computer attacks by third parties, but accidental damage or destruction of hardware, or administrative and operational mistakes by employees and third-party providers. So they do cover the malicious element and the accidental element. With respect to third-party cover, we cover 3 different elements, which are all triggered by the insured committing or failing to prevent a wrongful act. So firstly, security and privacy liability and defense costs. So if the insured suffers a security breach on their network, they transmit any malicious code to a third party, or if they breach any third party or employee privacy rights or confidentiality, the investigative and defense costs would be covered under this coverage head, as well as civil damages. This isn't just limited liability to the insured's customers only, but may include other third parties such as the payment card industry for card reissuance, fraud and PCI assessment charges. Then we've got privacy regulation defense, fines and penalties. If the insured is investigated by a regulator as a result of the cyber incident, the investigation and defense costs are covered, and the actual awards and fines are where insurable. Customer care and reputational expenses are covered, and we really see this being an exposed area, as the expenses associated with this are more often than not underestimated. So if there's a legal or regulatory requirement for the insured to notify individuals who've suffered a security or privacy breach, we pay for the legal, postage, and advertising expenses involved with this. The number of individuals affected can run into the millions. So consider the fact that the total direct loss of a data breach per record in the Middle East is $83. These are the costs for just one record. When hundreds, thousands, or millions of records have been breached, the cost accumulates substantially and can threaten the actual continued existence of a company, especially if they're SME. We also cover the individual customer care expenses for individuals whose privacy has been breached. So this is credit monitoring services, identity theft assistance, and we pay the costs incurred by the client to protect or re-establish their reputation or public images, so PR expenses. So we've also seen additional coverages that have arisen out of a general demand or industry-specific gaps, and these include the affirmative coverage for first and third-party IT infrastructure losses, and they result usually in business interruption or third-party liability. We've seen optional coverage for dependent business income loss and the insured's failure to supply or gain spot market coverage. We're also seeing defined terms for SCADA energy management systems, critical infrastructure assets, and more to clarify the intent of a policy for non-privacy related breaches. And we utilize the knowledge and experience of our underwriters within the company from the property teams and the engineering teams. This is particularly important when you've got a client whose main exposure lies in their operational technology and their ability to operate as opposed to holding data. Property damage as a result of malicious cyber incidents has arisen, and there's been a real push for cyber, hull, loss of leaf, which covers marine cyber-related risks. And we're also seeing a focus within the industry on manufacturing, onshore, offshore energy, commercial property, and ports and terminals. So what are the challenges to the insurance market? The pure fact that this is a class that insures risks that are constantly evolving, and I don't just mean the technology, I mean the attack vectors too, means that policies need to be extremely flexible and reactive to client needs, and that's not necessarily a characteristic of the insurance market. New coverages are coming out so frequently, but with little risk information and no historical loss information to support pricing. A potentially more significant issue is that if that data were available, it may quite quickly become redundant because we're seeing continuously improved methods by hackers, and they're finding new ways to evade cybersecurity defenses, and we're seeing new technology arise. Another issue is that there's no wording is the same, and there's various subtleties to coverage. As this is a newer class, all carriers are looking to differentiate their forms from other markets, which makes a lot of them unique. The uniqueness is quite fascinating in this line of business, but it's also frustrating for people trying to understand the elements of cover. I think the story has changed from a few years ago. Base policy coverages did genuinely differ, and now we've seen a coming together of this, but there's little standardization in wordings, and it makes it difficult for brokers actually to present direct comparisons to their clients, and it probably hasn't helped in eliminating misconceptions. The issue is cyber forms have been evolving for the last 20 years, and they're going to continue to do so in the future as insurance industry tries to grapple with these risks and the dynamic nature of them. There's also a lack of publicly available information relating to claims experience. This is picking up a little with regards to increased legislation and reporting requirements, but when it's not required by legislation, this lack of data is worsened by the general unwillingness of victims who've suffered cyber incidents to share information on these events, as they're worried about the potential reputational impacts. For example, one estimate suggested that anything between 69 to 80% of cyber incidents go unreported. And there's still very few major events to give us data points, so models are being based on secondary data and proxy data, so we're seeing disjointed pricing in the market. Cyber risks are also quite difficult to benchmark. The environment is changing so frequently, and the sophistication of cybersecurity practice can vary significantly, even amongst companies from the same industry sector of the same size. And therefore, taking a view on good risks, bad risks, average risks has been quite difficult, and it means pricing has continued to be disjointed. The potential for significant correlation across insured, so accumulation risk, are probably one of the most critical challenges in underwriting cyber risk. The risk of a massive attack or cyber incident that affects a large number of your clients is huge. It's the aggregation risk, and it's, for example, from clients using one common software. A security research and modeling company looked at an attack on an operating system used by a large number of companies, and they estimated that it would cause average losses of $29 billion across various scenarios that were modeled. That would totally blow the size of the whole the cyber insurance market itself. You can see different appetites, therefore, for cyber coverage in the market. Not all insurers are taking aggregation risk into account. The market is often pricing for an individual loss and not a catastrophic loss. And this again contributes to that disjointed pricing. Non-affirmative cyber risk also becomes a talking point here, as given the levels of potential cyber risk in many policies covering one single insured. So for example, consider a cyber incident that leads to a malfunction of a critical component in a manufacturing operation. This could lead to property damage and business interruption, as well as liability claims from their shareholders and customers if the malfunction leads to a defective intermediate and final product. It's systemic in nature, and insurers should be mindful that these other policies do not intend to cover this potentially catastrophic nature. And finally, we do see an absence of talent to underwrite and broker this class of business. Education is the hardest part, and there's a huge amount of naive capacity coming into the market that don't have the expertise to lead or transfer this risk. Client awareness is also still pending. It's definitely improving, but it's still pending, and a lot of this comes down to the brokers finding it a difficult class to translate to their client. So it's hard to say what's going to happen in 2019. It's constantly changing, but some points, food for thought. Rate volatility looks set to continue. We're in a soft market, and when we see certain losses in certain industry segments, prices can be pushed up quite quickly. But then where one industry segment's doing very well, we see a lot of coverages coming in and prices being pushed down. We're definitely going to see further product innovation. There's a lot going on with power, energy, marine, hull, loss of lease. We're also seeing some areas flooded with new capital and others reducing and managing their exposure, and that's definitely happening in continental Europe at least, and as far as I'm aware, beginning to happen in the Middle East. Interestingly, I also think we're going to start seeing smarter buyers. These are the clients who are analyzing their exposures, and they are buying for catastrophe risk, not dollar swapping. When we see insurers going beyond their normal limits offered, is where the client is willing to show the insurers exactly what the risks are and provide them with a lot of information. This helps with the modeling. We want to see the connective tissues of the client. We want to see the particular software as a service they're using and infrastructure they're using. And clients are increasingly understanding the systemic risks associated with this. No doubt we'll see technological advances, and we're definitely going to see these challenges with automation, like cars. Is that covered by cyber, or is it a tech E&O policy? And political instability. I mean, if the cyber landscape is going to be continuously utilized by nation states, I think we're most likely going to see that as well. So I hope I've been able to give you some flavor of what's going on in the cyber global landscape, but also here in the Middle East from a threat perspective, and have provided an insight how insurance is responding to these evolving risks. Thank you very much.
Thank you, Zainab, for this informative presentation. And I think for the benefit of time, we started our session very late this morning, unfortunately, and I think it's better we give the opportunity to my colleagues Zuhair and Mazen to start the second session, and if there are questions, we are happy to answer after the two sessions. Thank you.
Thank you, Ms. Zainab Khatib, for this useful presentation. Now we will start our second topic, which will cover the subject of e-insurance, bank assurance. Please greet the head of session, Mr. Zuhair AlAtout, CEO of Apex Insurance. Mr. AlAtout will introduce our next speaker and brief us about his presentation. Please welcome Mr. Zuhair AlAtout. Wherever you want.
Thank you. First of all, I'm really sorry for being late. I thought I was chairing the second presentation. I did not think that they're joining the sessions together. I thought I would have an extra couple of minutes to grab Wael's customers while he's busy here. As a broker, I know I wanted to grab extra commission. Sorry about this. First of all, I thank the Jordan Insurance Federation for a very well organized conference. This conference brings a lot of memories, as I was the chair of the first committee that brought in the first conference 2007. But now the conference looks a lot better. You guys are doing a great job. Engineer Majid and the board members, as well Maher and his team, you guys are doing a great job. I'm honored to introduce the next speaker. If you guys work in life insurance and you don't know our next speaker, you're working in the wrong industry. Our next speaker has been in this industry for a while. When I read his bio, because I've known him for a long time, I thought, oh, wow, I've been in this industry for too long. Our next speaker holds a doctorate degree in business administration and consumer behavior, as well as he heads the MENA team for Genri. He's an actuarial. He's a part of the Cyprus actuarial team. Dr. Mazen Abouchakra has been in this industry for over 20 years. Before that, he was in the banking industry. He brings a wealth of information to this session. Our next session is very important as it talks about a subject that has been on the mind of many insurance companies and banks, whether we do bank insurance, we don't do bank assurance. And he's going to carry us through e-insurance and bank assurance, which is a subject that has been on the mind of many of us for a long time. I remember Mazen, in like 5 years ago or so, we were talking, he's a visionary, and he goes, Zuhair, you're an innovator. Why don't you think about analytics? And when he said that 5 years ago, people weren't even thinking about analytics. So Dr. Mazen is always ahead of the team, ahead of the grasp, and he knows what he's doing. Dr. Mazen, the floor is yours.
Thank you very much, but the floor is mine, but the password is not working on this computer.
Okay. I'll tell you a funny story then until Mazen finishes. Should we start with this or you're okay, Mazen? I'll tell you a funny story about how Mazen and I got together. The first time we got together, we went for dinner. Then after that, we went for a local pub in one of the towns that the Gave was in. And we were start drinking. One of Mazen's team colleagues, Mr. Diab, he's straightforward, one of those guys that very spectacle. And he goes, guys, look at the expiry date of the beer before you start drinking. And I start laughing my head off. He goes, Zuhair, what's wrong with you? Why are you laughing so hard? I'm not saying a joke. I go, read the fine print. And the fine print says, نحن غير مسؤولين عن سوء التخزين. So the expiry date did not mean anything. And we cannot forget that. Mazen, ready? طب انتوا ما احنا عندنا غير
عندنا موجود بدوش بعمل ابديت
اوكي sorry about this technology we need it and it drives us nuts as well Zainab, it looks one of your hackers got into here
هاي في عندك صوت بدك صوت على البلان ما في
بس خلينا عم نشيلها خليه يشيلها
هذا بودي لك اياه
Sorry about that, because the password is correct, but something happened to the... Anyway, we'll get it through. وين USB تبعي؟ USB وين؟ وين الفكرة؟ ايش هذا هون؟ هيدا وين فليكر؟ في فليكر. I'm very sorry for that. It happens, but anyway.
Let's welcome Mazen first of all.
Well, good morning, first of all. The title of my presentation is Bancassurance Revisited. Now, the question we need to have to ask, is Bancassurance dead? The first time I presented on Bancassurance was 20 years ago, and I haven't done any presentation since that time on Bancassurance. However, for the sake of comparison, I will go through the outline and see how can we benefit, all of us, from the Bancassurance and what Bancassurance have brought to the world. First of all, I'll define it in a simple way and brief way. Then I'll go to share with you why we're talking about Bancassurance, what is Bancassurance, when did it started, how the distribution channel via Bancassurance is profitable to companies and to the world in general. What is the share of the world? We'll fly together around the world. We'll take Royal Jordanian Airlines and we'll fly around the world to see what Bancassurance is all about in the world. And then we'll look at the different models that exist in Bancassurance and try to come up, for the sake of Aqaba conference, with a new terminology, hopefully. And I will share with you the new terminology that I came up with during the preparation of this presentation. And finally, we land in Jordan and speak about what's happening in the Jordanian market. And finally, at the end, towards the end, we'll conclude the concluded remarks, which will check what are the perspective we see in the future from Bancassurance and how the new world and what my colleague earlier spoke about, the cyber risk, how all, and the digitization, how all fit together and wrap up. To start with, I'll define in a brief way what is Bancassurance, just like in a very simple manner. Bancassurance could be defined in two ways. The first one is micro. The micro is basically how can we cross-sell between insurance product via the bank. That's a simple, very straightforward way of defining it. The macro way is basically how can we structure a product, a hybrid product, and using insurance instruments and kind of hedge via the banking instruments the risk which is taking place. So these are the basic two definitions of the bank insurance in the layman words. Now, what are when you look at bancassurance, and I want to use a metaphor, bancassurance, during my presentation, because any distribution channel, bancassurance is distribution, it's very simple. Any distribution channel need to have integration, and whether it's bancassurance, whether it's any other of like something we call shop insurance, or when you go to a shopping market or shopping mall, we can talk about integration. So bancassurance is only one example of distribution channel which can be used for other distribution as well. There must be some benefits to the parties, the stakeholders, which are the banks, the consumer, and the insurance company. So I'll first start with the benefits to the insurer. First of all, the insurance company, by doing any kind of like leveraging the distribution, they'll expand their customer base, they diversify their product, and they benefit from the trust which we all have in banks or in shops or whatever we rely on. Now the millennials, they trust their mobile phones. So could we have mobile insurance or bank insurance but apply to the mobile phone? So anything where any platform, any distribution platform, which has a trust, a security, provides a certain element of distribution, and we can talk about. So bank insurance is not only, when you think about banks, it's a paradigm. So the last benefit for the insurer is basically how to leverage the point of sale and how to reduce the cost by selling via over-the-counter. Now, what are the benefits to the bank? The bank, of course, they have a lot of expenses, they have many branches. So it's a new source of income. They can leverage their branch, which exists, fixed cost, and make additional cost, additional revenues. They help also because bank, they have the saving products and things like that, which I'm going to go more into details during my presentation. They help in the financial planning and the fiscal advantage to their customers. And finally, also they increase, by diversifying the product, they increase the loyalty of their customers to the bank. And they encourage basically the saving and people depositors via commitment, because when we deal with insurance products from the behavioral economic standpoint, the insurance creates more commitment than banking deposit. When you have money in the bank, you tend to have some pleasure to take it out and spend it when you go on vacation or when you want to buy a new car. However, if you deal with insurance product and bank insurance, you have more committed not to take the money away because there are some penalties. So the insurance does help the people to be committed, and the commitment is very important. So when we combine both banks and insurance, then we realize that we are better off. Finally, how is the consumer benefiting from bank insurance? Well, he has the accessibility to the financial services in a different way. He has new cost-effective services. When you are talking about bank insurance, the regulation is more simplified once the platform is ready, and of course there are better automation which are integrated with the banks, and basically you have a one-stop shop. So basically we don't have to buy insurance and then go to the bank and maybe deposit the money and things like that. So basically it's one stop. And that's also a precursor for any distribution channel which is using digitization. Now, what are the synergies and what are, when we want to wrap up this section, why bancassurance? We have a new demographics, new preferences for people. People have the needs, and when we provide a platform when they can be satisfied with their getting their needs being done, that's something, an economic incentive for the banks to get into the insurance field. Also, the saving trends show that people do need to save more because we are living longer, our mortality is getting more and more, so basically the pension schemes and all the savings are not enough to maintain the same standard of living. So basically, being able to save via insurance with a platform where we trust, whether it's a bank, whether it's a mobile, whether it's anything, it increases the commitment of the consumer. And of course, when we are in certain regulatory platform where we can save when we are putting money aside for our, like in our longevity, then also there are differential tax treatment which create a new incentive for the economy and the whole balance of power. And it's an opportunity to grow and the portfolio and have new potentials and new design and new innovation. Now the synergy is creating also by having staff sharing, by having less investment in technology or sharing investment of technology, by having common HR and things like that. And also from the fund management point of view, there is also an additional value of how to create funds and be able to protect someone's wealth. So this is why bancassurance exists. There is a leverage, there's economies of scale, and there's a platform which is trusted by the consumer. Now to go to the second thing, I will briefly talk about when did it started and some history about the bancassurance. Bancassurance started in France back in the 70s. It's the first platform where people, first was mutual, like Crédit Agricole was for people, agricultural people, helping them via the bank, and it started to have selling people, especially agricultural people, to give them some banking advice and protection. And then in the late 80s or the mid 80s, most European companies start spreading, the bancassurance starts spreading, and by the end of 1999, the Americans, the USA, started to change their law. I will come to the law later on. And also Latin America got caught up in the 1990s and 1999. And the last people who started in this, embarked into bancassurance are the Chinese or Asia. And they started developing very nicely on the bancassurance side. So this is some like history, very brief history. To go a bit more details on the regulatory platform, there are different ones. In the USA, there were the 1933 Glass-Steagall Act, which forbid insurance company and banks to sell any product over the counter. So there was a big wall between banks and insurance and financial services. Then, in 1999, there was the climb. There was a new law in the USA, new Climb Lively Act, who came in and let them broke this wall. In Europe, the walls of regulatory platform, there are two. One is the Anglo-Saxon way of doing things. One is the continental Europe way of doing things. In UK, they are mostly, they let the IFAs, the independent financial advisor, to help people sell insurance or to go and sell insurance. However, in Europe, and it's like they have a very complex regulatory system in the UK, which did not really help bancassurance. Whereas in Europe, it's like more relaxed and more, the regulatory platform is more helping the banks to develop bancassurance. Latin America, they're now more and more accommodating for banks to prosper, especially in Ecuador. In China also, they tried to recently to help the distribution of insurance product via the banks, and now they're doing it through different means, like Alibaba and Tencent are getting into these kind of distribution channels. That's for the brief history and for the brief like legal framework in a simple manner. Now I would like to go and see a bit more the effect of what we're talking about when we're talking about bancassurance specifically, and how can we leverage this into the new distribution platform. Now, if you look at the bank, what they do, they buy and sell money. This is basically what the bank does. They buy and sell money. This is basically the principal, work or employment of a banker. Now, if you look on the credit loan side, this is where they sell their money, and on the left-hand side, on the investment sector, where they buy their money for the deposits. So this is like the most very simple way. The degree of complexity go from down to up, from like saving accounts, bonds, funds, and equities. And on the right-hand side, they give consumer loans, mortgage, and sometimes they do business financing. So if you look at this, is what this slides show you that what the bank does. How does this impact the insurance? When we speak about bancassurance, what can we do about that? So if you look at the selling side, the business financing, mortgage, and consumer loan, then we can get into industrial fire insurance, we can get into key man insurance, which is complex, to a less complex product like home insurance, mortgage insurance, and credit life insurance. I need to stop here for a minute because many people confuse credit life insurance or some insurances, and they call it bancassurance. Bancassurance is when the beneficiary is the consumer, not the bank. When we speak about credit life, the beneficiary is the bank because they're giving a loan and they're insuring the people's life. But if the person had any problem, the bank is paid for lack of paying the loans. But bancassurance is not that. It's not credit life. Bancassurance is when we have a product over the counter being sold, and I will go into more details how it's sold and what kind of approach to make it successful and what are the success factors. Now, if you go look at the other side of the balance sheet of the bank, the equities and the funds, how can we use these to protect on the bancassurance side? We can create some saving account like education, long-term planning for retirement. And also we can have endowment product, which are like more on the protection side with least complexity, or we can go into more universal product, unit-linked product, which are a bit more complex, and they use equities and balanced funds to be able to protect the people. Now we're talking a bit more reality and more sophistication with the bancassurance distribution channel. All this, they have some factors to be successful. How can we achieve the success factors? First of all, each market is different. We cannot import products and ways of doing things and dump them in a country because the regulation is different, the mentality is different, and the environment is different. So one of the most important factors is how to adapt our product to the environment. That's very important. The second important issue is basically what are the properties. Basically, it has to be easy to sell, very simplified. We cannot make a bank insurance product very, very complicated. It has to be simplified underwriting. It has to be bundled with the banking product to be packaged in a nice way. It has to be, we don't need to cannibalize because, it's very important in bancassurance. We don't want to throw products at the consumers which may cannibalize other products. So it has to be very specific and complementary to the banking product rather than to be completed to compete with the banking product. It has to create added value. It has to have some tax importance. It has to have, it should be cheaper. It should be more flexible and things like that. Otherwise, why would you go and encourage people to buy product via the banks? And as I said earlier, it has to respond to the market needs. But the number one, and that's something all the researchers and people who dealt with bancassurance, the number one success factors must come from a commitment of the bank to sell products via the counter. If the board of directors of the bank and the board of directors of the insurance companies are not happy together, and the banks is not committed to sell via the bank counter, there's no way possible. Even if you bring the best product in the world, it cannot be sold and it will not pick up. So that's a very important fundamental factor for the success of bancassurance. Now I will take a minute to fly you over the world and show you how bancassurance share of the entire insurance pie is important around the world. And I will check few Arabic countries in the Middle East and show you how we are shy away in certain countries of this challenge. So globally speaking, whether it's PNC, whether it's life, 23% of the global insurance in the world is sold via banks. You're talking about 4.8 trillion, 23% of that is sold via bancassurance. So it's a size, so we're talking about, if somebody does the math, 23% of 4.8 trillion, then you can imagine how that number would look like. If you fly to the USA, since I told you there was in 1933 an act which forbid the selling of insurance via the counter, as you see, it have a repercussion on the share. Only 6% on the combined level, and on the life side is 13%. So the non-life side is very negligible in the American experience of bancassurance because they just started 20 years ago only. If we fly now to Latin America, also the non-life is very negligible. The life is 39% of the insurance share comes from bancassurance. Let's go to Morocco. Morocco is one of the largest bancassurers in our Arab world. Also, originally speaking, if you remember, some of you, Wafa Insurance used to own the bank. Now it's the other way around. But we started, with Morocco. It was a very, very important market, still is in bancassurance, especially on the life side. If we fly now to South Africa, 15% of the business come from the life side. Australia, 43% come from the bancassurance on the life side, and 3% on the non-life. So those are numbers, how much bancassurance share in the market. I'm coming to Jordan in a minute. In Russia, 34% of the business come from bancassurance, 88% of it is life. If you go, and I don't know if Elena shared with me the statistics. Okay, China, 52% come from the life, in bancassurance life, and non-life is negligible. If we go to the UK, only 1% come from the life, 6% non-life. This comes back earlier to when I spoke about the regulation. The UK has a very complex regulatory framework, and they encourage usually the IFAs to go and sell insurance, and they don't really encourage people, the banks. It's like very complex to have bancassurance. Therefore, the numbers transcribes that. If we come now to continental Europe, France, one of the largest countries in the world who sell bancassurance, and this is one of the birthplace. 65% come from life and 14% non-life. I will go quickly now. Germany, 36% share. Poland, they have 28%. As you see, always the life bancassurance is much more, usually except the UK in terms of share. Now Spain, 49% and 12%. We go to Italy, 77% share of the life come from bancassurance. These numbers, I'm flying all over the world to show you how important bancassurance makes out of the pie. It's really unbelievable. We go now to my birth country place, Lebanon. We have 21% of the business come from bancassurance in the combined life and non-life. And here we go to Jordan, less than 1%. Yes. Is this acceptable? I don't know. I'm asking the question for the Jordanian market. I had to. I'm sorry, Ahmad. So basically, we have a lot of things to do. I mean, this is why I thank the organizer of the Aqaba conference to invite me to speak today, because there are plenty, not only in Jordan, but in the entire Arab world. I think there are plenty of, because some people think that bancassurance compete with the regular IFAs. There might be some political issue there, but we need to all work together to increase the pie, and bancassurance is one of the means to do that. Not only bancassurance, I'm coming to a new way now to share with you how we can all work together to improve these numbers. Now, to step a bit back and show you how bancassurance can be formed and how can we work together, not only bancassurance, but in any new distribution channels. What are the entry strategies? How can we enter, and how can we start bancassurance? Either we do from greenfield entry, we just start from scratch. We found a company or a system that is bancassurance, sell only bancassurance. It could be now online banking, it could be digital platform, any distribution channel, but we started from scratch. Or we have an M&A, or we have a joint venture between banks and insurance company for the underwriting and for the legal, to have a legal entity, joint venture, a legal framework. Or we have a very simple distribution cooperative alliance between the two entities. So those are the only 4 ways. I couldn't think of a 5th way of how to enter into bancassurance. Now, when you think bancassurance, many people think, okay, bank, assurance, like two entities come together, we have agents, we have branches, and this is how the way it should work. That doesn't work. That's not something that we can envisage. The way it would work, and I have several scenarios, there's a cooperation agreement between several insurance companies. I think this is the Jordanian model, and then it goes they have with the bank a cooperation agreement. The insurance company keep their agent, and then they can sell via the branch bank and leverage the product and distribution via the bank branch for over-the-counter products. That's one way. A second way could be cross-shareholding. Both insurance company and the bank have a cross-shareholding agreement, or could be also a partnership, either or, and this is basically they have a cross-selling via the bank. It could be that a holding company owns both the banks and the insurance company, and the same scenario, they will have a cooperation and do that. Another way possible would be a bank owning an insurance company, all right? with this, like dotted lines and on the bank, and then they have a cooperation and partnership agreement. Or it could be the other way around. Or it could be some like unit trust or building societies or assistance providers. They all like get together, or like each one on his own, and try to sell their product, combine a hybrid product, because we have a TIM is the traditional insurance model, we have a BIM, which is bank insurance model, and the HIM in this case, which is the hybrid insurance model, would be selling and cross-selling the product via the banks. Now, what are the policies that makes the bank insurance work? I took like several scenarios to just show you like what are the best success factors for bank insurance to work, and this is something we can all learn from. The loose shareholding, the joint venture, the ownership, either insurance or banks owning each other, or the integrated retail financial business model. If you look at the cross-selling, across all the 4 ways organizational structure, whether it's one of those 4, we have a good potential. I mean, cross-selling has a good potential. Once a bank and insurance company get together, once a mobile phone and insurance company get together, when a shop and insurance company get together, we are able to leverage and cross-sell. That's something obvious or like, tested. Market share, when we think about market share, the best one is the integrated model, and the ownership gives you some market share. When you speak of efficiency, the most efficient way of selling any product distributed, not in insurance company, but across any other platform, the integrated model also again proved a very good efficiency. And finally, the quality of revenue comes also from the integrated retail financial business. So if we look at this slide, we can see that once we speak about integration, the success factors becomes much higher than having a loose shareholding, because there is a commitment. Now, what are the approaches? We have in bancassurance, when you go to a bank and you want to buy or like a product, there are 3 approaches. The most traditional one are the direct approach. So basically the banks hold data on us. They have a huge data. Earlier, Zainab spoke about the importance of data. There are a lot of data on us, and the GDPR, so now I don't know how much bank can leverage that. But they have they want to do our financial planning. They have the data. They bring the product, and they come up with an insurance product fitting our needs. Then there is the indirect approach. The indirect approach, like say I'm walking to the bank. I ask them for euro. The bank have a smart system. They ask me, do you have a travel insurance? So basically, based on the needs, considering the insurance proposition question, then the product will pop up. All right? Maybe I will say I want to go register my dog. I will say pet insurance. So this is basically because the bank is stopping. We stop there and we trust the bank. But now, as you know, more and more we're not going to the bank. We're doing online banking. So basically, does bancassurance work in the online world? That's a question mark we need to address. Correct? This is why the third approach is the digital approach. Now we have to differentiate a lot between digitization and digitizing the bank or digitizing the insurance company or being online. I spoke to many CEOs around the region and worldwide, and sometimes there's some confusion. They tell you, we are into digitalization. We are digitizing our operation. I say, how? What are you doing for that? They say, well, we have now a new website and people can buy online. That's not digitization, in my opinion. But digitizing our insurance company is not digitization. Digitizing our insurance company is taking the files and making it into digit. But that's not digitization. Digitization is when you have a customer-centric, which I'll get into more details, and looking at the client needs and digitizing the product in a way to take the behavior into account to sell him the product. So that's something very important. So the digital approach should be integrating both direct and indirect together to cater to something what we call now, and I will define it later on, ecosystem. It's a system that comes for the client. The one client, he has a system, he has needs. My needs are different than Dr. Lana's needs. They're different from anybody's need. So each one has a certain characteristics, and we have to address them specifically, and the digital world can help us do that if the cyber risk is protected. Now, how to make bancassurance work? Very, very quickly. We incorporate the sales into the targets. We put like target sales in the bank. We increase the effectiveness of sale channels and product mix. We tailor products combined for customers based on new segments. We invest, of course, in technology and move towards further activity of integration and economies of scale. And very important, what I said a minute ago, we have to differentiate between e-Bancassurance, and this is the new terminology which I call Bancassurance. It's different. What electronic Bancassurance has nothing to do with digital Bancassurance. So we have to now work on digital Bancassurance and how can we achieve our target via that. Now to speak, since now we are in Jordan, to look at the Jordanian market a little bit, I look at the region and focus a little bit about Jordan. In the region, we lack so many things. We have lots of oil, but we lack so many other things. And this is something we have to work and invest our oil money and our human resources, which we have also, and we have to invest them into some new ways of generating income and enhancing our economies. One of them is the need for a comprehensive insurance supervisory authority and universal insurance legislation. In many of our countries, we lack legislation which are geared towards life insurance, about e-signature, about so many things. We have so many legislation which need to be done to encourage such like distribution vehicles. We have a relatively large number of small to medium sized insurance companies and banks. Now we see, like in Dubai, there are many banks merging and creating like a mega banks. In Kuwait also they have, and that's something encouraging, because once you have a larger platform of banks, then you can do like, you become more and more, you have flexible muscles to be creative and innovative, and you have the means to do that. We have absence of compulsory insurance in most states. Low public awareness. We have, if we make statistics in the Arab world, our financial literacy is not among the top in the world. So we need to have awareness, and our objective, our role as insurance and reinsurance and being part of this region, we have to create public awareness and we have to improve the financial literacy for the population. There are historically some cultural and religious growth barriers which now are becoming less and less important, and this is a good sign. And in some countries, I was very happy yesterday to see the two federations, the Insurance Federation of Jordan and with Zuhair, the president of the Egyptian Federation, to make a protocol. So we need to encourage this and make it more and more with the Emirates Insurance, Mr. Lutfi. I know you do have with Jordan, but we have to make it across the whole Arab world more and more, so we all have connections. Now, what's again to speak about regional outlook? In the past few years, we were talking about globalization. Now we're talking about digitalization. So we have to be ready for that. We have to really be aware, and I will share with you some of the insurtech which are starting now in the Arab world, and we are still shy of our expectations. A large potential growth is expected in the Arab countries because most of our populations are below age 35. So most of them are millennials. They have different needs than our generation. We need to address that. We need to be aware of that, and we need to prepare the platform for that. So bancassurance could constitute one of the essential channels in the development and growth of financial institutions. And if you allow me to say bancassurance, not bancassurance, because now bancassurance is something which is a bit, we need to catch up the new technology. We don't want to say only bancassurance as it was 20 years ago. We want to say bancassurance. So in Jordan, the bancassurance started in 2005. I don't know if everybody is aware, so banks were authorized to practice bancassurance in accordance with the bank's law and the license by the Hay'a, the commission, to practice insurance business in the kingdom. A bank must have a bancassurance unit, at least 2. And if they have several lines, they have to hire additional lines, but at least 2. The license to practice bancassurance is given based on the type and subdivisions of the insurance required. Now, this is basically, I took this from the Jordan Insurance Federation. I think all the Jordanian people present here are familiar with that. I'm not going to go through it. It's basically how many insurance company, life and non-life, how it's dissected. But the most stunning element of this slide comes from the thing circled in red. There are only 13 people who's doing bancassurance in the kingdom. 13 people. You have 646 agents, and you have many banks. You have a lot of banks. All right, and you have many banks like Arab banks and Nisr and Arabia Insurance. So we need to have a lot of homework to do and to get the whole thing to act together. Hopefully in the years to come, this will become 130. Now, what is earlier I said the bancassurance pie share of the Jordanian market is 1%. This slide shows that, this different distribution channels are direct sales, unified insurance office, insurance brokers, insurance agents, and bancassurance. And bancassurance only makes 1% only. So this is the growth. So there is growth. There's some volatility in the panel, but again, there is some growth. Here it shows you how much is the life in 2017, what's the component of the life. So also in Jordan, the life bancassurance is more than the non-life, but still we have to work together to make this larger. How to conclude? And this is where I start my presentation, to conclude. What are the threats and challenges? The typical problems are there's hesitating attitude of bank staff towards insurance products and selling methods. Banks, whether it's in Lebanon or in France or in Germany, they tend to not like when the branch manager or the owner of the bank, they say, let's sell this product or so. They might make less money for it, or there is no commission base or something like this. So they tend to they have an attitude. And when you have an attitude without commitment from the board of directors of the bank, then it doesn't work. So there must be commitment, and you have to work on the incentives the bank employee who is in charge of selling insurance have. There's competition between insurance product and bank products. As I said earlier, some of the insurance product cannibalize the bank product, and this is why the banks sometimes don't want to sell them. So we have to address this issue very vividly. There's a rivalry between the insurance management and the bank management. And sometimes there's absence, as I said, and I keep on repeating, of concrete commitment. We cannot say, let's do bancassurance. We have to roll up our sleeves and do it. Other challenges which are external are the regulation. Now, again, with GDPR, with all this like transparency, with corporate governance, things are becoming a bit more complicated for the bancassurance or any distribution to be done in a legal, seamless manner. And of course, earlier she spoke about the Zainab very nicely. So the cyber risk, there's increased pressure from insurance and regulator to improve the security standards. So that's something also, it's another challenge to succeed in the de-bancassurance or bancassurance. Now, who are we, what are we, where are we in the value chain? This is a very nice slide which depicts where we are and what are the challenges and threats we are facing. This slide, like basically, it looks at all the incumbents, the new incumbents, the one in green in the bottom. If I will read them, basically they are the tech giants, the retailers, the insurtech, the community groups, and the peer-to-peer. Those are the incumbent to our world. Those are like threatening us or disrupting us. This is the words which I don't like. We're talking about disruption. You go to all these conferences and they speak disruption. This is disruptive. There's nothing disruptive. We shouldn't be afraid of each other. We should be transforming ourselves. I like digital transformation. I like much better than digital disruption. Disruption is threatening. It doesn't sound nice. It's not nice. And if we are, I work as a reinsurer. We are a large reinsurance company. We are not an insurtech, and I would not say I'm an expert in digitization or in digital to make an app. I can have an opinion. I could be an expert in some aspect of it, but I'm not an app developer. We have to give the app developer to the people who develop the app. We have to go to the bank, and he is a specialist in banking, and seek his knowledge. This is why bancassurance exists. He knows banking, we know insurance, and we put the two together, and we sell a product successfully. Now, those incumbents, they say, okay, it's a threat for us. I think they're complementary to us. We know how to protect the risk, and we know how to price the risk. As actuaries and as data scientists, we can use big data in order to be able to make a model and be able to insure the risk. Now, insurance companies are becoming more and more threatened because some reinsurers as well are getting to the insurance turf. Some reinsurers are buying insurance companies. So this is, if you want, this like orange arrows pushing the insurance towards the customers. So everybody is looking at the customers. The customers, of course, are like, they need some needs. There are many millennials, and they have some specific ecosystem for each one of them. And everybody, the incumbents and everyone is going to the same customers, bombarding them. I think there must be some transformation in our attitude, and we have to be complementary and not think any incumbents is threatening us. We have to find ways to cooperate using the technology to better reach the client and sell them the product via a very solid, secure, trustworthy distribution channel. be it Bancassurance, being shop insurance, being digital Bancassurance. All right? So this is a very important message in the concluding remarks. Here I try to, this is coming from it's an insurtech ecosystem. This is from around the world. As you can see, if you look at all this together, this is basically where insurance companies are becoming threatened. When you see home renters, for example, like for example, life and health, all life. I'm familiar with some of you are familiar with Oscar. Those companies, they have like in the car industry, like telematics, they're becoming real time, like company like Vitality and things like that. They give you a very nice gimmick to engage you in the app, and then you start buying insurance via them. So it's becoming more and more increasingly creating an ecosystem which kind of compete with our ecosystem. And I think we need to start thinking on how to transform ourselves and cooperate with some of these guys in order to promote our business in a better way and more efficient way. So this is only to give you a look at how this ecosystem is being developed. So there are suppliers, there are plenty of stakeholders in the digital worlds who are forming together and creating this new mass and new alternative protection. If you look at the Arab world, there are several startups, but still very shy. I will give you some stats at the end of my presentation. But let's say in UAE, there is a company called Dirk and Yalla. The Dirk is basically it's artificial intelligence road accident assistant, which is from those startups which I listed on the right-hand side. Only few has to do with digital health or insurance. All the other startups are not insurtech. So as you can see, the insurtech in the Arab world is not yet at the level where the world should be. Yalla is basically Yalla compare. It compare like mortgages, different car loans, things like that, and help also again to sell insurance at the end. In Lebanon, we have a company called Spike, which they have won several awards around the world. It's basically a diabetes mobile assistant. It tells you, for example, if you go to a restaurant in Paris, download the menu. It tells you, okay, listen, you are diabetic, you should not eat this dish or that dish. If you have gluten intolerance, it tells you what to eat, what not to eat. It reminds you if you have your insulin with you or not, whether you're like, you have enough. So it has some wearable here, the glycometer, to tell you whether your insulin level has went down or up. There's a company called Chiron Tech, which is also a Lebanese startup, InsurTech. It helps in health insurance fraud. I'm not going to go through all of them. Proximi, it gives you also a real-time health assistant, tells you which hospital is nearby and what to do, and so on and so forth. Coming to Jordan, there is a company called Monojo. I don't know, anybody familiar with that company here in the audience? Anybody knows Monojo? Nobody know Monojo? No? Okay. It's a tailored healthcare services. They use biotechnology engineering in order to help people access to healthcare at a cheaper price for sickness which are extremely rare or very costly. So they help them to find means using technology to pay less and to get the best service possible. Selfie, I think people maybe are familiar with it. It's a automated financial assistance that gives like very quick loans, very, very informative, and also it has some insurance aspect into it. So those are like the startup in the Arab world. There are few, there are others, but they're still like very shy. So we need to also cooperate with this company and transform our business model to do Bancassurance, if we want to call it this way. So Bancassurer hybrid insurance model, are regarded as severe competitors to TIM. TIM is the traditional insurance model, since they achieve cost advantage and better customer access. If we can overcome the hesitating branches sales staff attitude and integrate our activities and commitments, we may even become even more and more successful as insurer. There are trends toward technology. We have to have improved effectiveness, reduce cost, digitize product design, and most importantly, we have to leap into integrated Bancassurance model. What our recommendations are, we have to design innovative Bancassurance products for a clearly defined group and distribute them in a way digitally to cater for their needs using the best technologies available. have a close and transparent cooperation with commitment from the banks and from other distribution providers. Use partners' expertise to structure highly secured and trustworthy bancassurance innovative digitally distributed products. And finally, to optimize bancassurance efficiency, we need to optimize 3 parameters. Improve, let's say, optimize distribution channels, customer reach frequency, to increase it, to have engagement, more engagement, and again, to product design based on digital behavioral ecosystem. We have to look at the behavior to be able to sell insurance product efficiently and effectively. How does the ecosystem help us? The ecosystem basically, in other words, is the client-centric behavioral management system which allow us to understand what the client wants. Since bank in the old days are a very trustworthy and secure place to put our money, we trust the bank to put our money. This is why we trust the bank to sell us insurance policy, and we feel safe at the cost-effective ways. But now with the Bancassurance, it provides you ease of access, again, since we're not going physically to the bank and we're doing things in a digital manner. So it reduces the barriers to insurance purchase. Length requirement is reduced because we can have real-time monitoring of the needs of the person via wearables, and it improves the customer-worthy journey. The customer become more engaged towards our product and more alert and more happy or more satisfied. Why? Because they believe there is certain trust, because there are certain rules about it and there's a certain structure. They make the customer understand the product better because it's simple. We don't anymore write in small prints what the exclusions are. It has to be very transparent. We make the customer continuously aware of the protection and offer services around the policy, and claims. Finally, the ecosystem consists of personalized offering. As I said earlier, we have to use data analytics and decision analytics to be able to make the products and engage them during the entire policy period and act as a life enabler, rather than sit there, sell the policy, and wait until the people have a claim to interact with them. So the ecosystem in the MENA, we are only 8% of our potential, whereas in some other countries in the US are 60% of their potential. In the Arab world, we are only 8% of digital potential. We have 1 startup a day established in the MENA versus 60 in the US. And if we compare us and the US, of course, we are the same population, more or less. So, but 1 to 60 is we're very shy of expectation. The contribution of the Middle East digital economy is low compared to benchmarks, though the average varies between, let's say, UAE, they have much better digital economy than other countries, like Tunisia, for example. But on average, we are low. We have high potential opportunities areas relevant for the Middle East, which are mobile payment, digital health, bancassurance, and e-commerce. We have a lot of potential. And those slides on the left, it shows you the share of the digital contribution to GDP. Our share in the MENA is only there were 9 countries surveyed, only 4.1% come from digital, the rest come from other, so it's very shy. We're half of other countries. Our economy is not yet the digital powered. So we need to be aware of that. Again, as a conclusion, we need to think about always integrating product, integrating the distribution channel with the insurance savviness, which we do, and try to transform our business model to become digital savvy and via cooperation agreement and partnership. So bancassurance is not dead. Bancassurance is alive. We need to work hard to jump and leap into the future and try to make the bancassurance. And we have a lot of models. We have a lot of experience in that, and we need to work all together with the regulators, with the associations, and with the insurance company and the distribution channel to succeed in this journey. Thank you very much, and I appreciate your attendance. And sorry for being delayed at the beginning.
Thank you, Dr. Mazen, for the very interesting, informative presentation. Thank you also for the reality check that you gave us that we're lacking behind of our digitalization. Now we open the floor for questions. Please, anybody that has a question, him and or her, please stand up, state your name, your company, and to whom you're addressing the question to either of our speakers, please. Thank you. Please. Mike. The lady first, of course.
Thank you. ضحى عبد الخالي from Escadenia Software. دكتور مازن عندي سؤال. What are your views بموضوع the convergence of search engines as Google? أنت بتعرف إنه مع شركات التأمين with insurance companies like MetLife. The strict regulations in the USA market has been eased towards the integration of IT services and IT platforms as an assistant to insurance companies. April 18 was MetLife, the famous MetLife Google search, and 5 other companies. So what meant at the time is that you could buy insurance policies using Google search engines, and they started with the auto licenses, and then the life. How do you see that sort of collaboration? Is it a kind of threat to the bank assurance formula that we're used to? The banks are no more seeing, in Jordan, for example, the statistics say that banks think that bank assurance is out of scope. It's a diversion from the core business. We don't want to go there. And we see more sort of marriages between IT and insurance companies to push back assurance online and make straightforward online purchasing. Thank you.
Oh, it's a long question, but I'll try to, if I understand correctly. As I said, thank you. As I said and mentioned in my presentation, bank assurance is a distribution channel. It's not a product. It's a way of it's a behavioral way of doing things. We used to go to the banks and know the branch manager and sit there and spend some time there because we trust them with our money. Now we trust. I mean, the younger people, especially the younger generation, trust more their mobile or their computers. So basically, the model is the same. Whether you go to the bank and you buy the protection from there, or you go to your, when you're sleeping at night or in the morning, you look at your mobile and you go to the Google and you buy you check the distribution coming electronically to you or digitally to you, and you buy it. It's the same principle because you trust the platform. You trust Google, you use it every day, and you feel comfortable with using Google because you have all the searches done there and it's very reliable. So the trust component is very important, and I don't think we have changed. The only thing is, this is why I call it the bank assurance. Digital bank assurance is basically should be the future, but still you need to have components. The components like who will invest the money. You have heard about the cryptocurrency and all these things, and like people start buying this cryptocurrency and it collapsed. So we are not yet, I think, we're not yet, even we speak a lot about blockchain, all these things, but we still have some room to go. It's being applicable, but we still have some room to go. But today, you still need a bank for, let's say, whether investment bank or a private bank or retail bank, to invest the money and to deposit the money. You still need it. I mean, we all still have bank account. Now, we don't go to the bank often, right? We don't step into the bank, but we still need to have a bank account. So Google or MetLife or any other company, they need to have some kind of financial services in the background to help them channel the funds to the right places and to create this thing. And they need us as an insurance company to help them on the protection side. So as I said earlier, we don't need to think, to answer your question now in more concrete way, we don't need to feel threatened or think about disruption. We should be alert and awake to transform ourselves as insurer, whether we are brokers, whether we are the reinsurer, or whether we are an insurance company, transform our mentality and thinking to be one of the module in the new structure. Not being, they're not going to eliminate us, but we have to transform ourselves for our module to fit this new structure, which is the digital structure. So I think, I don't know if I answered your question or not, but this is basically my opinion.
Thank you. Bassem, please.
Yes, my name is Bassem Haddadin. I'm a consultant at Apex Insurance Brokers and Consultants, and the question goes for you, Dr. Mazen. Bank assurance works well with individual products, insurance products. It doesn't work with more complex industrial, commercial policies. Now, with the trend of, the increasing trend of buying insurance online, it's easier for the clients, and it's straightforward from the client to the insurance company. Do you think that buying insurance online is a threat to bancassurance? This is my question.
I don't like threats. We live in the Arab world, so always have conspiracy theory and threats.
Insurance
I don't believe in
goes
threats.
with
I believe in, we need to complement, this is basically, we need to complement each other. There are alternatives. There are, like now, for example, even in reinsurance, there are alternative reinsurance. In banking, you have alternative banking. In every single sector, you feel like, okay, there are incumbent coming, and they are creating a new platform or a new way of doing things. The online, banks have online. As I said earlier, there are many people, like we tend to confuse electronic banking and digital banking, if you want, or electronic buying or digital. At the end of the day, the banks will be in your watch, on your hand. So bancassurance is a distribution. Whether you distribute via the watch or via the online or via any other vehicles, it is transforming ourselves to adapt to the new technologies. I don't think it's a threat. I think it's a challenge for us to adapt and to transform ourselves in order to stay providing the best service possible to our client. Now, if you look at brokers or whether brokers are threatened, to use the terminology, by bancassurance or online banking, I think no. They created now the aggregators, for example, who are sometimes put at the banks, and the brokerage firm is trying to provide the best service possible to the client. So the aggregator are a way of transforming the brokerage industry from being face-to-face or by being by phone now to become more or less electronic or digital transformation. Now, so you said something earlier that you don't think that big risk or complex risk can be dealt online. They are more complicated, therefore they need much more expertise. Like banking, if you are, for example, your income is limited income, you cannot afford a private banker. But if you have certain income, you can have your own private banker. The same thing with the private insurer or private bank insurer. If you have a big risk, you could have an expert at the bank or at the digital platform or any distribution channel, try to cater for your client-centric need. So, again, the message is we have to transform ourselves rather than disrupt ourselves.
I think the two questions have been addressed to the bank assurance, and Mazen have actually addressed the subject very thoroughly. So thank you, Mazen, for this information. This has been going on in our part of the world for the last 30 years, and we haven't advanced it. You saw the percentages and penetration. Yet, I think the fastest growing class of business worldwide now, including in the Middle East, by the way, is cyber insurance. So I don't know how much in Jordan being promoted. It is being promoted in different parts of the Middle East. Definitely in UAE is one of the fastest growing segment in the business. Even insurance companies now locally have some treaties arrangements for them. They started selling cyber insurance. We are not yet as advanced as in Europe or as in the US, but we are learning, and we are learning fast. And we are actually moving within our broking industry. I'm a broker, as you know. Previously, I was an underwriter, like every one of you here, guys. We are trying hard to transfer and acquire the knowledge from Europe back in the Middle East is hard. There are different parts of this knowledge. It's not only about the insurance side of the cyber business. It's about understanding the cyber crime itself. And that's where the harsh side of it by transferring that knowledge. But I just a note to conclude my Zainab presentation. It is actually the fastest growing class of business worldwide now. You see in the figures, we're talking about billions of dollars already being purchased. And I had a comment from one of my colleagues in the cyber business. At one point of time, cyber insurance will be the largest actually premium income in any class of business going forward, given the technology fast pace of actually changing for all of us. I know we will stay behind. I am aware of that in the Middle East. We will stay behind, but we are required as leaders in our business to actually work harder ourselves with our colleagues and with our insurers, with our clients, to educate them about the threats, to educate them about possible losses. I think there's lack of awareness on how much impact it has on the business. how much impact it have on us as individuals. I'm sure, I don't know if any of us here have been hacked in the past or he had suffered financial losses, but it's happening more and more also at personal level. So I don't expect questions to Zainab, I think, at this side, but I wanted to conclude this by saying that we need, as an industry, to work harder in this line of business, which is actually associated with what Mazen talking about. Advancing bank assurance, you need to advance the cyber with it, because bank assurance would require large cyber protection too.
Absolutely. Yeah.
So thank you, guys. Thank you.
Do we have any more questions before we finish? I have a quick question for both of you guys. If we have a bank assurance and the data got hacked, who's liable, the insurance company or the bank when the data gets hacked?
I will answer it actually quickly on behalf of Mazen, because that will definitely depend on the contractual arrangements between the bank and the insurance company. It's the contract which is signed between both companies which will identify the obligations and the duties of both parties. So usually, okay, maybe at law you will find the negligence side of it where people can escape some clauses in their contracts, but usually the norm in arrangements like this is the contract law which actually prevail. Am I correct, Mazen, on this?
I'm all the way.
Thank you.
Zainab, do you have anything to add?
No, I completely agree with that. I think a lot of it in Europe comes down to who's the data controller and who's the data processor. And in a bank insurance model, I'm assuming the bank and the insurance company are both data controllers. It's not just a processing element. So, yeah, I think agreed. It comes down to the contractual obligations.
One more thing is really what keeps me up, waking up at night when it comes to cyber insurance is the claims. I mean, the underwriting now, we're starting to have some experience at it, but when a claims takes place, the handling the claims still boggles us a little bit. Do you have any insights on that, Zainab?
I mean, in London at the moment, the claims handling is very much integrated with post-incident response, crisis management. So far we've actually been seeing it handled really well. That's the point, that as soon as the cyber incident occurs, usually the client, it's not the same as any other loss where they notify them later on. It's almost as soon as they're hacked, they notify the insurers and they work together immediately to start figuring out kind of the post-loss mitigation, et cetera, and my only one comment would be that if insurers know exactly what they're handling, the claims will be handled properly, and I definitely would say that's happening within Liberty. A lot of insurers are offering coverages that I don't think they totally understand the exposure that they're letting themselves into, and then when those claims are coming through, there's a fight there. But if you understand exactly what you're offering, and that's down to the insurer's appetite, and that's understanding the technical elements. I mean, we've seen so many coverages come out last year, something called bricking, system failure. They're really, I mean, their clients are experiencing them, but insurers aren't kind of doing their research into the exposures yet, offering them immediately, full limits, everything, no additional premium, and then when the claims are coming through, not maybe handling them the right way, and then later on actually removing themselves from being able to offer that kind of coverage. So,
I have one more question.
Go ahead.
With preventive cyber risk, preventive measures beforehand, except with the insurance company, with the company, and then they do some prevention ahead of time. And that's one thing. Would this reduce the premium? And would okay, that's one question. Do the prevention reduce the
Yeah, they're increasingly kind of joining in with that. So they're starting to be able to, so if someone binds cover with them, they're offering education services, they're doing, I mean, we offer external IT assessments of their infrastructure, all of these kind of things.
And how about negligence? If there's negligence, who's liable?
If there's negligence.
Negligence at the, let's say, at the bank or at any
Human fault, human error.
Pardon?
Human error, we're talking about negligence here.
Oh yeah, then the data controller will be, for sure. But in terms of premiums or any discounts, it would be at renewal. If they've actually implemented all those recommendations that came about from all these education, etc., yeah, there's that chance. Anyway.
Thank you.
Excuse me? Okay. Thank you, Dr. Mazen. Abouchakra, for your valuable presentation. Before closing our first session, we would like to thank the head of sessions along with the speakers for their great effort and informative presentations. I kindly ask Mr. Imad Al-Hajre, Vice President of Vice Chairman of Jordan Insurance Federation, to honor the head of sessions, Mr. Wael Al-Khatib, Mr. Zuhair AlAtout. And Mr. Zuhair AlAtout. And I would kindly ask Mr. Wael Khatib to honor Ms. Zainab Al-Khatib for her presentation also. Yeah, طبعا. I'm sure you're so proud of her. And Mr. Zuhair AlAtout will kindly honor Dr. Mazen Abouchakra. Okay, please بس هيك صورة جماعية للكل. اوكي قبل ما نروح على نطلع على الكوفي بريك بس بدي اذكركم انه او بدي اخبركم انه حيكون في استعراض جوي بكره الاربعاء على الساعه 3:30. بتقدروا تشوفوا هذا الاستعراض الجوي من شاطئ الاوتيل. ولازم كمان تعرفوا انه هذا الاستعراض او استعراض الطيران الجوي الاردني يعتبر من افضل 5 استعراضات جويه في العالم. ف يعني try not to miss هالشو هذا رح يكون بكره الاربعاء على الساعه 3:30. رح نرجع نذكركم فيه مرة تانية بس رح يكون إن شاء الله بكرة الأربعاء الساعة 3:30. يعني من أحلى الاستعراضات الجوية للطيران الجوي الأردني اللي ما لازم يروح عليكم. And now you're kindly invited to have a coffee break hosted by the conference organizers, and the coffee break is located in outside here. And you can visit the exhibition area where you can network with our sponsors. Also, you will find a free networking areas where you can meet with your other colleagues. Kindly know that we will start the next session in 30 minutes. We will gather again here at 1:15. Okay, 15 to 1. Okay, إن شاء الله 15 to 1. بنرجع نتجمع هون أو 1:15 نرجع نتجمع هون بعد الكوفي بريك. Thank you.